Hello everybody, happy Tuesday. Welcome to KCMS Facebook Live. I wanted to just go over real briefly just a few minutes of your time to talk about building credit for your kids and also how to build credit for yourself. I've been getting a lot of people calling the last few weeks because school started. A lot of people just like myself have a senior. My son's turning 18 in a couple weeks, so he's, it's time for him to start establishing his own credit. And been working on it for him for a few years, but I wanted to just kind of take a quick moment to share briefly because I know a lot of people have the same question, where do I even start to build credit? And this applies to us as adults as well. You don't have to be 18, 17 to take this feedback. This is just how do you begin to build credit, period, whether you're an adult or a teenager. So the first thing you've got to do is get a secured credit card. You want to start doing that at 18 years old, but and if you've never had a secured credit card, or if you're wanting to build your credit, regardless of what age you are, you do not want to start building your credit with loans. That's going to just give you, it's a high interest rate, and then you eventually pay off the loan. So then you're back to not having any established credit again. So getting a secured credit card is the absolute must to build good credit. If you want to have a 700-800 credit score, perfect credit score, it's a must. There's no getting around that. You can have lines of credit, and they have like those credit builders that you can get. And I'm not saying that I'm not a fan of those, but it's just the credit builder accounts just take a lot longer for it to actually build your credit. So it's a much slower process. Getting a secured credit card, yes, it might take $100-$200, but it's an investment that is going to save you so much money, in the next few months. If you can just, try to save up some money to invest that $100-$300 to get the secured credit card, you're going to get that money back time and time over within the next few months once it's established. But as far as kids go, establishing good credit actually starts at a very young age. The earlier you start to teach them about chores and how to manage their money and how to earn their money. That's the big thing, is how to earn their money, not just giving them money when they're needing something from the store, or when they get older and they want to go to the mall or whatever. Just not giving them money. You've got to teach them how to earn that money. But most importantly, I don't know, it wasn't an option when I was growing up, but now they offer debit cards for kids. It starts as early as age 6. You can go to, I know Chase starts at age 6, where you can get a debit card for your kids. It's not a credit card, it's a debit card, but it'll be linked to your checking account. So just contact your bank, ask them if they offer debit cards for kids. Most of them have 0% or 0 monthly fees, and it's linked to your account, and they don't have any any monthly fees or anything like that. They have overdraft protection, all those kinds of things, and it's going to be helpful for you to be able to give your kids a debit card instead of giving them cash. That way it's easier for them to manage the money that they're spending, and they can create a budget with that. And on top of that, I would try to save like $1 or $2 a month. The earlier you can start, the better, because if if it's just teach them, save 20% or, a minimum of 10% each month or each week, however often you pay them for their chores, have them a savings account as well. And then guess what? By the time they turn 18, now that $200 or $300 that you're needing to get them a secured credit card, they've earned that. So it's not coming out of your pocket. So now they've earned that payment that's needed to get the secured credit card. So get your children a debit card first, and then link that to your credit card, or link that to your checking account. And then teach them about how to manage their money when it starts with the chores. Again, budgeting and paying your bills on time, and making sure that they don't buy the candy that they really can't afford because maybe they're wanting to save up for a toy or something, a video game. Then they can't buy certain things if they're wanting to save up their money for that. So just start that as early as you can. So debit cards, and then eventually you'll get a secured credit card. Secured credit cards, the best ones to get, Capital One offers a student a student credit card that's secured, and then my favorite is actually Texas. There's a credit union called Texas Trust Credit Union, but a lot of credit unions, that would be my recommendation also for starting to get a secured credit card, because you want to establish a relationship with a credit union. They offer the best interest rates. They make decisions internally, so whenever you start building your credit with a credit card with them, and then in 6 months to a year you're ready to buy a car or a house, and you have some established history, and you can sometimes even talk to the person that's making the decision internally. So unlike the bigger banks, where if you apply for an auto loan or a mortgage loan, you just get denied and you don't have anybody to talk to. With credit unions, you sometimes have the option to talk to the person that's actually making the decisions, and it just offers more leniency on top of the lower interest rate. So getting an established relationship with a credit union, getting a secured credit card, you want to start off there. And then we can talk later about how to use the credit card. Once you do get a credit card, we'll talk about how to get it. Stay away from retail credit cards. Don't get no Victoria's Secret, Best Buy, Amazon. Stay away from those credit cards. You don't need those credit cards. You need a major credit card with like Capital One or a credit union or a major bank. And then begin teaching, there's something, you have to educate your kids about the difference between a debit card to the credit card. A debit card is just money, that's your money that you put on there, you saved it or you earned it. A credit card is just like a loan, so it's really, really important that you help them understand the difference between the debit card and the credit card. If a credit card is going to give them $500 or $300, that's their credit limit. That doesn't mean that they should go and spend it. And if they do spend it, then they have to pay it back plus the interest. So it's a great way for them to understand, if this is money you're borrowing. If it's a necessity, then yes, you need to borrow it if you got a flat tire, because you're going to have to pay interest, but you got to be able to get to school or work or what have you. But if you're wanting to use a credit card to go eat at McDonald's and you're going to have to pay interest, that's not a very good choice. So just teaching them the budget and manage their bills and pay on time and what interest rate is. But again, those are things that we can discuss further. That's part of the credit program, is helping you understand, of course, to help you clean up your credit, but it's also helping you to understand how to build your credit and how to build it the right way and using, without going in debt. There's right strategies to everything. Right now, Texas Trust Credit Union is actually offering, if you click the link, I'll send you an email, and they're offering where you can actually get $100 if you open an account with them before October 31st. I can send you that link, and it'll show you how you can actually get a free $100, and I'll give you the details on that. But I think that's pretty much it. So just establishing credit at a young age. Look into getting a debit or credit card or debit card for them at the age of 6, and then switching that over once they turn 18. I'll give you some different options on credit cards, and then also another way you can build their credit is by adding them on as an authorized user to one of your credit cards. As long as you're managing it well, if you're managing your credit card well, if you've always paid it on time and you're using less than 10% of the available credit limit, so if it's a $500 credit card and you're keeping the balance below $50, which is 10%, then absolutely, I would definitely add them on as an authorized user. But the backside to that is you have to understand, as an authorized user, it can help them build their credit, but it can also ruin their credit as well. So don't add them on as an authorized user if you're not able to manage that credit card properly. If you're not paying it on time, or if you have a really high balance, as always recurring high balance, then I wouldn't add them on as an authorized user, because it's gonna impact their credit negatively more than it's gonna help it. So if you have any questions, just let me know. My number is 817-271-6342, and our website, kcmsfinancialgroup.com. But I'll send the link if you want more information about building credit, and then how to help build your kids' credit or your own credit, or even just general questions about credit overall. All right, look forward to talking to you soon. Bye.